Good morning, Steve Free in Chicago with the morning grain news. Soybeans up about 2 cents, meals unchanged, soybean oil down about 37 ticks. Corn unchanged with May up a penny, wheat down 7 in Chicago, 9 in KC, and 9 in Minneapolis. Stock market has turned a little bit lower. Dollars higher, crude's down a good $1.50 at $75. Gold, copper, coffee are all lower. I think that on Friday we saw the funds do a little bit of short covering given the oversold picture of the grains. Last week, funds sold 146,000 contracts in the grain room. So now they're short corn, short soybean oil, added to their short in wheat, and reduced pretty substantially their long in beans and meal. In the bean market, we did see one group lower this year's bean export number, raise the carryout to 270, plugging in a good crop for next year, lowering exports again, and putting the carryout at 440, which is negative to prices if we see that kind of crop size and lower exports. Over in the corn, we've seen that similar action. This group lowered U.S. Corn exports, raised the carryout to a little over $1.4 billion. Next year's acres and yield, plus a little bit lower export number, put the carryout closer to $2.4 billion, which is negative to prices. In the wheat, not much change. They still show a good wheat crop this year. And a carryout of 650. Rains in the plains has certainly dampened price action, and we also see wet conditions in the northern plains that could lower acres there. I took a quick drive down to Nashville over the weekend, and coming back I saw a very good wheat field. Again, the soft red wheat crop is rated higher than last year, and I also saw that a lot of the acres for spring crops, whether it's corn or soybeans, have been planted. So we're off to a mostly favorable start. This week should be mostly dry across the Midwest with cool temperatures. Then on the weekend, rains come back, and there'll probably be 2 shots of rains across the Midwest, especially in the Ohio River Valley after that. So that could slow final plantings there. Outside markets, again, Old Republic was dissolved. FDIC sold its assets and its deposits to JP Morgan. This is the second largest bank failure in U.S. history. Markets are going to have to try to figure out regionally how banks are doing after some of these bad loans that were sent out, low capital, and just the overall concern. Fed will be raising interest rates this week, and we'll see how much that reduces demand. We also noted that China's PMI data was lower in April than March, and China has increased its secure safety of letting out information. All these things are concerning, especially to the energy market.